Oh my goodness. So I believe we are now recording. Um, just for a brief update, we have hit meeting capacity. We have 100 individuals signed in for today's event, which is the first time in 5 months that this has occurred. So we'd like to thank you all for joining us for PERA's 75th anniversary seminar series. This month's topic is Slice of PERA Estimate of Benefits Pie. And because it's lunchtime, we're all going to be craving pizza here shortly. So officially, as I mentioned before we started recording, officially, my name is Christina Gothier. I am the Public Relations Coordinator for PERA's Albuquerque office. Joining me today is my Bureau Chief, Cristina Perea. There will be a quiz at the end of today. Both Cristinas, very confusing, totally not intentional. Those of us in this space are members of PERA, but several of them are PERA staff members, members of our executive staff team, members of PERA staff. And so we appreciate you joining us here today for today's event. We are going to kick off today's presentation with just a brief overview of an estimate of benefits. When we are gearing up for this momentous occasion, PERA responds to your request with 6 pages that make lots of sense to staff, but generally don't make a lot of sense to our members. And so try as we may to make that information as simple as possible. It can be kind of daunting preparing for retirement when the only thing you've known up until this point has been to work. So on today's agenda, we officially will have a brief refresher covering tiers, vesting, and retirement eligibility. We are going to take the next important step, which is how to request an estimate of benefits. Once you receive that, we are going to go into detail for the estimate of benefits cover letter, the estimate of benefits calculation pages. We are going to dip our toe into the reciprocity pool. We will absolutely open up the floor for any questions that you may have. And presuming we can squeeze one more person into today's presentation, Karen Lujan, who is our PERA Smart Save Deferred Compensation Plan Manager, will be joining us to point out some additional tools that are available through the PERA Smart Save program website. And so we are ready to get started. All right, so as I mentioned, today's agenda begins with a refresher for tiers and vesting. PERA was divided into 2 tiers of membership during the 2013 legislative session. You are in Tier 1 if you were hired into a PERA eligible position on or before June 30th of 2013 and had member contributions in your bucket as of that date. You are in Tier 2 if you were hired into a PERA eligible position for the first time on or after July 1st of 2013, or perhaps you worked for PERA in the past, separated employment, and took a refund of your contributions. If your contribution balance was 0 and you returned to work for a PERA affiliate on or after July 1st of 2013, you are considered to fall into Tier 2, even if you pay PERA back for those withdrawn, forfeited, refunded contributions. Vesting occurs when a member completes a minimum of 5 years of service credits. They do not need to be consecutive 5 years. It just needs to be a total of 5 years of service credits. The important thing to note when you reach your vested status is that when you meet PERA's age and service credit requirements, you are eligible for a lifetime pension through our retirement system. Vesting also has an additional perk. You become eligible to purchase additional types of service credits, which we cover in our general and retirement seminars that we hold monthly at PERA via Zoom. All right, on to topic 2. Officially, it's kind of important to note retirement eligibility because it actually impacts the date you are eligible to request an estimate of benefits. And so just as a brief refresher, individuals who are currently employed under State Plan 3, including peace officers under Tier 1, Juvenile Correctional Officer Plan 2, Municipal General Plans 1 through 4, Municipal and Police and Fire Plans 1 and 2, all have a 25-year at any age retirement eligibility. And so regardless of the number of birthdays, you officially can retire when you have completed 25 years of service credits. The minimum on this left side of the screen is 5 years of service credit and 65 birthdays. And so once you reach that minimum, you are eligible. The important note for the remainder of this eligibility table is that you have to meet the minimum age and service requirements on one line to be retirement eligible. If you happen to be 59 years of age and have 20 years of service, you can absolutely give up your day job, but PERA cannot pay your pension until the month after your 60th birthday, provided you submit a completed application. On the right side of the screen, we do have some Tier 1 plans that have a 20% service credit enhancement tied to them. Those include members of the State Police, Correctional Officer, and Probation and Parole Officer Plan 1, as well as Municipal Detention Officers. You can see the age and service markers mirror what you saw on the left side of this screen. However, those individuals who hold eligible positions in those plans officially receive a 20% enhancement of their service credit. So an individual who holds an eligible position their entire career, 20 years and 10 months, officially are eligible to walk out the door with 25 years of service credit. So I'm just going to take a brief pause. Somebody did ask me for a copy of the PowerPoint, and I meant to drop that in the chat before I got started. I would have to interrupt the entire presentation to drop that now. Somebody else mentioned they can't see my screen. I'm actually logged in twice, and I can see my screen from my second device, so it may be a technical issue on your end. You might have to play around with the settings on your computer. So, all right. One more eligibility table exists in Tier 1. Those individuals who are eligible participants of municipal police and fire plans 3, 4, or 5 officially have a 20-year at any age retirement eligibility. And so that's only applicable to Tier 1 members. The minimum requirement for these plans as well is 65 years of age and 5 years of service credits. You will note the age and service markers that you saw on the previous tables exist here as well. And so that something important to note is members who retire with less service credit don't earn as much in retirement as somebody who puts in more years of service credit. And so while it may make you retirement eligible, you may find that it impacts your retirement benefits in a way that you're not necessarily excited about. And so we have members who work above and beyond their eligibility to lock in richer retirement benefits. All right, so Tier 2 retirement eligibility, for those officially who fall under Tier 2's general retirement plans on the left-hand side of the screen under State General Plan 3 and Municipal General Plans 1 through 4. 2 eligibility markers exist. Officially, age 65 with 5 or more years of service credit is the minimum, or something that came about in the 2013 legislative session, which is Rule of 85, where a member has to have a minimum of 5 years of service credit. Once they satisfy that requirement, their full years of age, full years of service credit added together needs to equal 85 to satisfy that requirement. If a member gets to 65 birthdays and 5 years of service credit first, they are absolutely eligible to retire at that point. For the right side of the screen, you will find that our public safety retirement plans under Tier 2 cover State Police, Correctional Officer, and Probation and Parole Officer Plan 1, Municipal Police Plans 1 through 5, Municipal Fire Plans 1 through 5, and the Municipal Detention Officer Plan 1 officially fall under 25 years of service credit at any age, or a minimum of 60 years of age and 5 years of service credit. It just popped in my brain that I totally spaced out listing peace officers on the right side of the screen. So Tier 2 peace officers also fall under this eligibility table, just in case that was a question for one of you in this space. All right, topic 3. Officially. So I kind of lost my moderator for potentially the entire presentation since we're at capacity. So if you have a question, definitely please drop it in the chat or unmute yourself, and I promise I will get to all of those questions. And so on to topic 3, important questions. How do I request an estimate of benefits? All right, so in our retirement seminar, we kind of give you a retirement timeline. Thank you, Green Buildings, for turning off the lights on me. Officially, anytime during your career, you can request a service credit verification when you are within 3 years of retirement eligibility. Whether you intend to retire on that date or not, you are eligible to request an estimate of benefits. When you are 1 year out, if you have already requested an estimate of benefits, or maybe this is your first time, you are definitely encouraged to request an estimate of benefits at that 1 year marker. 6 months prior to, but preferably no less than 60 days in advance of your planned retirement date, you should actually submit an application for pension to PERA. Oftentimes when I ask members who wait until the day before they plan to retire why they waited so long, they tell me they didn't want their employer to know they were planning to retire. And so here's what's really interesting. I always mention that PERA is a lot like Vegas. What happens here stays here. And so the only exception to that is on the 28th day of the month prior to your planned retirement date, PERA will reach out to your employer and request a certification of your final wages and the date that you separated employment. Prior to that point, they don't hear from us, but we strongly suggest that you actually give your employer an appropriate 2-week notice. Even if you're not leaving on the best of terms, do it to honor yourself and your lifelong career. Be respectful of yourself in that process and give your employer, the notice that is required by their rules and regs. So retirement applications come way after the fact. I always recommend members start with receiving an estimate of benefits. Members who turn in retirement packets without receiving an estimate always, entirely blow my mind. How do you know you can afford to retire if you don't know what PERA is actually going to be able to pay you? Your retirement date, the last of the items on this timeline, is effective the first day of the month after you meet PERA's age and service credit requirements, submit a completed retirement application, and terminate all employment under PERA. And if you're duly employed under the Educational Retirement Plan, you must sever all employment under both systems to be eligible for retirement. And so if somebody wanted to retire by June 1st, as an example, they would have to be completely off the books with their employer by May 31st, submit a completed retirement application, and meet age and service credit eligibility for the plan they are enrolled in. So let's see, good questions popping up in the chat. So this is where we begin the how do I request an estimate of benefits. And so one of the questions in the chat is there a general email address to request a service credit verification? And the answer is sort of yes. We prefer as staff that you complete a PERA request form. It serves multiple purposes, but essentially it gives PERA written notice to audit your account. And so the top section is important and serves us better than a general email because maybe you've moved and forgotten to tell PERA, maybe your phone number or email address has changed. Maybe you switched employers and your records haven't caught up at PERA. So we absolutely want you to officially complete a PERA request form. Everything at the top section under member information is all you. We trust you know the answers to all those questions. In the bottom half of the form, officially, you're going to find many check boxes. And so officially, if my clicker here works, very exciting times. The second checkbox is to request an estimate of benefits. There is a blank line at the end of that line, at the end of that checkbox line. And so we as PERA are prompting you to help us provide an estimate of benefits that is actually something useful. I've had members write in that space, I don't know. And so my response to that is, I don't know either. Not because I haven't been working for PERA for 17 years, but because I can't read your mind. I don't know what your retirement plan is. And so a more appropriate answer on this line is first eligible, first available, ASAP. Maybe you're targeting a certain number of years, a certain number of birthdays. We have members who, in their minds, target a certain percentage. Lots of members spread rumors amongst themselves and say you should always retire December 31st. You're not going to find the lady at PERA who's been here 17 years tell you that's the perfect time to retire. I often tell members when you've had it up to here, that might be the right time to retire because your health and your sanity definitely trumps your planned retirement date. If you're eligible and you've had it up to here, maybe that's the right date for you. So officially give us a date. Technically, in a 12-month period, PERA can provide up to 2 estimate of benefits. And so you can do a, December of one date versus December of another date. Or you can put one date and maybe you want to see a comparison between 2 different beneficiaries. And so I'm sort of skipping through the questions. How important is the beneficiary designation? Officially, we are going to talk about how that impacts the calculation a little bit later in the presentation. But as a general rule, the further in age you are from your designated beneficiary, the more your benefit gets reduced. If we're talking about a pre-retirement beneficiary, they would only receive a payment if you passed away prior to retirement. So there's not an impact there because you won't be alive to see them receive that benefit. Post-retirement, your age and relationship to your beneficiary definitely is something that could impact that calculation. Somebody else asked an important question about the age and service markers, about having less service credit and how that impacts your retirement calculation, asking if we have a table for that. And so officially no, but I'm going to show you where you can sort of work through that. So I promise I will get to that answer for that question here in just a little bit. Under this checkbox, give us a date you're targeting. First available, certain number of years. Give us your beneficiary's information. This can be the same as the beneficiary you have on file for pre-retirement. It can be somebody completely different. PERA does need that beneficiary's full 9-digit social security number because we can't enter anyone into our database without it. Item number 2 under this checkbox, obviously in this space, we're likely all PERA members, right? We're all PERA family here, but some of us have also worked for a public school, college, or university in New Mexico, which likely means that we also have reciprocity. On PERA's end, it's not an automatic check with our sister retirement plan for service credit under their umbrella, so you do need to check the ERB box. And so it's kind of an interchangeable acronym, ERA, ERB. That means the same thing to us. They recently rebranded and called themselves NMERB, and so this is kind of a nod to that. All right. Ooh, I lied. Let's go back. At the top of the form, you will find a noreply.records@state.nm.us email address that you can scan this to email and submit it. As you might have guessed, your response will be met with no reply, or if your email system is set up to accept it, officially, it'll kick back a message that says you've reached the no reply box. If you want to confirm, please reach out to PERA. Great questions. There is a mailing address at the top of the form. We accept these forms by fax. There are secure drop boxes available at PERA's offices, and a new feature that was added last November. Members can actually upload a scanned copy of their request form along with several other documents, including applications for pension, to their Rio self-service account. And so later on in the presentation, we are actually going to be officially talking about our self-service feature. Sorry, Karen Lujan with Deferred Comp just messaged me. She still can't get in. So I'm trying to read messages while I present. Sorry, I promise not to be distracted anymore. And so officially, there are many ways you can submit that documentation or the forms to us. At the bottom of the form, it does note that you should allow 30 to 45 days for processing. If you turned it in last week, It is likely not going to be ready this week, but if you just want to confirm PERA received it, you are welcome to reach out. If on day 46 you have not received a response to your request, please reach out to PERA. There is a really fine chance that we already completed your request and maybe it got lost in the mail, or the email system, if you check the box to receive email correspondence, kind of got filtered out. And so please reach out to us if you are beyond day 46. The only rare exception to that is sometimes requests with Educational Retirement Board service credit can take longer because we rely on them for some information. And so I promise, back here. All right. How important is the beneficiary designation? Good question. The answer is, if you want to see the multiple types of payment options as a response to your request for an estimate of benefits, PERA needs to know your age and the age and relationship of your beneficiary. If you're going to take the full benefits for yourself, then a beneficiary listed in Section 1 or under Item 1 is less important. But wouldn't you rather know what your options look like since you're still in the planning phase? So that's my note for that. Do we accept digital signatures? And the answer is not yet. But since the PERA request form isn't modifying anything in your file, you are eligible to type your name into this form. If you have a full version of Adobe Acrobat, you can save this form and it should retain your typed fillable information. If you do not have full version Adobe Acrobat, you are going to want to print this as a PDF so it retains all the information that you typed into the system. Otherwise, we're just going to get a form that has checkboxes. So there's that. If we are talking about submitting an application for pension or a change in beneficiary form or a change in records form, those need to be live ink signatures. So PERA is working on a digital signature program. It's still in the process, so it hasn't been released yet. Once it is, it'll be a major announcement on PERA's end. I know several other agencies accept them. PERA's working on it, I promise. All right, somebody asked a question about item number 2 and reciprocity. So officially, we all know what PERA stands for, but just in case. Public Employee Retirement Association, technically of New Mexico. JRA is the Judicial Retirement Act. So if you've ever been a sitting judge in a court, that checkbox technically applies to you. If you were support staff in the court, that checkbox does not apply to you. If you were a sitting magistrate judge in one of the magistrate courts in New Mexico, the Magistrate Retirement Act, known as MRA, may apply to you. If you were support staff in that court, yeah, that doesn't apply to you. I've mentioned that ERB stands for Educational Retirement Board, so hopefully that addresses the question. Does having a beneficiary lower my benefits? We're actually going to get to that in just a little bit, like in a few more slides. So on to topic 4, officially, estimate of benefits cover letter. When we respond to you, you are going to receive 6 pages. The first 3 pages are considered to be your cover letter. And so just a quick brief thing. For those of you who've unmuted yourself, do you have a question for me? If you don't, if you could please mute yourself so the background noise doesn't override the presentation material, that would be really lovely. All right, so for those of you who maybe have to step away for other events or meetings, or maybe you're going to get to eat lunch today, I'm super excited for you. We are actually recording today's event and it'll be posted on our website, hopefully a little bit later in the week. We will also make a PDF of today's presentation available to participants on the website. So we will drop that along with the presentation. And so our website is nmpera.org. I'm just going to drop that in the chat. All right, so officially, I think that'll be good. All right, so 3 pages. We are going to go through them in detail. The top section of the first page should be your personal demographic information. If it is not, please let us know immediately. That, heaven forbid, shouldn't happen. I know it's happened a handful of times, especially with folks working remotely. Many reasons we stopped using full Social Security numbers. All right, so in the body of the first paragraph, you are going to find 2 dates. First date, shows you an employed through date. That is the date that you should remain on your employer's payroll through. The second date is your effective retirement date with PERA. When we looked at the timeline, I specifically called out two separate dates. Being off your employer's payroll, meeting age and service credit requirements, and submitting a completed retirement application in this sample needs to happen by December 31st of 2023. That will allow the individual who receives this estimate to retire effective January 1st of 2024. That is the date the member meets age and service. The other thing that we provide in this section is a essential service credit verification. We tell the individual through this last posting from your employer, this is where you stand in terms of service credits. All right. Next two paragraphs on the first page of the cover letter remind you that this is just an estimate. If an error exists, whether it's something that, PERA did behind the scenes or information we received from you or your employer, by law, PERA is required to make the appropriate adjustments. The second paragraph says that your pension amount may be different if you pick a different retirement date. I know our estimate of benefits form says you can request two estimates in a 12-month period. If you've already requested those two, we do have an estimate calculator on our self-service site that might help you play around with some of those calculation dates. Another question in the chat is, can you stop working, for example, at age 60 and still retire at age 65 if you are vested? And the answer is yes. PERA has a deferred retirement option where you accrue the service credits prior to meeting eligibility. As long as you leave your contributions on account, you can come back to us 6 months before you meet retirement eligibility for your tier and plan and apply for a deferred retirement later. So that takes care of that. Bottom of page 1, we tell you here that your complete application for pension must be filed with PERA no less than 60 days prior to your effective retirement date. Now, if an emergency arises, PERA can work with less, but we cannot time travel. So on May 1st, if somebody showed up today asking to be retired May 1st, PERA can't do that. The soonest we can get that individual retired would be June 1st. So dates are super important on our end. You want to make sure that you officially are adhering to those deadlines so that your retirement can be processed on time. Officially, under this paragraph, you're going to find items 1 through 3. The first set of documentation PERA is going to ask you for is proof of age for you and your designated beneficiary. It's as simple as providing a copy of your valid driver's license. If you don't have a driver's license or maybe your beneficiary doesn't, we give you a list of alternatives in that paragraph. If you are legally married at the time of retirement, PERA is going to ask you for a copy of your marriage certificate. If you are not married, please do not run out and get married just to get us item number 2. Item number 3 says that PERA is going to ask for your beneficiary's full 9-digit Social Security number. That is required because we actually report to the IRS and New Mexico Tax and Revenue. And so we want to make sure that officially we are utilizing the same tax ID number for all parties involved. You may see some of our documentation say that we're asking for your and your beneficiary's Social Security cards. And so the answer to that is we would prefer to see those documents to prove that the Social Security card number matches what is in our file, but you are not required to provide that if you are not comfortable doing so. Just keep in mind, if you gave us a bad SSN, that's between you and the tax organization that you are dealing with that needs to figure out where all those tax dollars went and were credited to stranger. We love that, right? All right, so, oh, I forgot I did check marks. All right, on to the top of page 2. The answer to the question in the chat is, what about divorce documents? If you've ever been divorced in the history of your lifetime, PERA is likely going to ask you for court-endorsed copies of your final decree, marital settlements agreement, and any orders from a judge dividing your retirement benefits. If you are divorced or were divorced prior to your employment with PERA, the application for pension form actually reduces that requirement to the first page of your court-endorsed final decree. if you've been married and divorced between your hire date and your date of retirement. Officially, we need every single page of every single final decree, marital settlement agreement, any orders from a judge. And to the question in the chat, PERA pays dead people and we pay felons. If your divorce documentation says that your former spouse is entitled to a community property share of your divorce earnings, we pay those to your deceased ex-spouse's estate, so their new spouse might be enjoying your retirement. So we pay dead people. We also pay felons because there hasn't been a passage of a law in the legislature that would sever that ability. So just throwing that all out there. Item number 5. So here's my note for you. This letter still shows items 5, 6, 7, and 8. Officially, we did some revamping to the application for pension form, which condensed it to one document. It just has multiple sections now. So if you go to nmpera.org/forms, you will actually find a type fillable PDF that contains items 5 through 8 within it. And so you definitely don't need to give us separate documents for each of those items. Once you have gathered items 1 through 5, officially, you are going to submit those to PERA for processing. Once you've done that, any and all changes must come to us in writing. We do not accept telephone calls or emails. If you are changing your date, we have a form for that. If you need to change your beneficiary, form of payment, we can walk you through that process. So please reach out to us if you have any questions. Another great question in the chat is, do you recommend we take the paperwork to your office or to upload them? So officially, you can do whichever is most convenient for you. I know that PERA is considering a soft reopening, and so you have the ability to bring in your forms for review with a retirement specialist. More details will hopefully be released on that soon, or you can upload them to your Rio self-service feature, and those will go straight into your file and initiate a process for them to be reviewed. So you definitely have some options there. All right, this paragraph under items 1 through 8 has a minor outdated statement. And so it says that your first benefit check will be mailed. Direct deposit, as you can see in the crossed out number 8, actually became requirement in 2014, courtesy of a rule change at PERA. So your first payment will be released for direct deposit on the last business day of the month you're effectively retired in. No more paper checks. So hopefully that takes care of that. The last paragraph in this segment on the screen you will see here is, if you are intending to purchase service credit with PERA, it must be paid in full before we retire you. You can't start retirement receiving monthly benefits and come back later and try to buy time. That's not the way it works. All right, so retirees who are purchasing time with PERA may be required to pay an additional fee to our sister retirement entity, the New Mexico Retiree Healthcare Authority. This paragraph is just included as a courtesy for them. The last paragraph officially contains contact information for the retirement specialist who prepared your estimate. You will never find my contact information in that space. Maybe when I first started at PERA, that's where it populated. But as part of the outreach team, this is not something that I provide today, even though I would be happy to answer any questions you have about your estimate. This paragraph also contains contact information for the New Mexico Retiree Healthcare Authority and PERA Smart Safe Deferred Compensation Plan. This page, the third page in the cover letter series, is included as a courtesy to our friends at the New Mexico Retiree Healthcare Authority, telling you if you purchase military or airtime service credit, it may impact your relationship with retiree healthcare. That's not a question PERA can answer. That should be directed to them, and their contact information is provided there as well. How does a disability retirement impact if you're not yet 65? And so Disability retirement is something completely separate from today's topic, but if you are approved for a disability through PERA, essentially the age and service credit markers kind of dissolve, and you may get service credit for your service that you've accrued through your approval, or if it's a duty-related disability, you may get other benefits as allowed under the rules and the statute. So this is very different than the topic we're discussing here today. I would strongly encourage you to reach out to PERA directly. But essentially, if you're already retirement eligible, disability retirement isn't going to get you a higher benefit. And I know some of our members kind of have that mentality. That is not actually how our disability retirement provision works. All right, on to topic 5, the estimate of benefits calculation pages. So there are 3 of these as well. Before we dive into them, it's important to understand how pension benefits are calculated. PERA is a defined benefit plan. PERA is going to take your years and months of PERA service credits, multiply that by pension factor or pension factors for the plans you would have been employed under during the course of your career. We are going to multiply that by your final average salary. And so when we do that math, it determines the member's first available payment option, known as form of payment option A. On page 26 of PERA's member handbook, you will find additional details. When I have a minute to link that over for you, I will definitely drop a link to our handbook for you. All right, so as I mentioned, the estimate of benefit calculation pages are also made up of 3 items. We are actually going to review them out of order because it makes it easier to explain how your estimate of benefits was actually calculated. So at the top of the first page, you're going to find member information. What you should find on your personalized estimate is your name, PERA ID number. When you get to the date of birth box, make sure it is correct. Your year of birth and your month of birth are taken very seriously in this calculation. We are comparing that to your date of separation, date of retirement to determine your age nearest month. And so, I forgot I put these lovely little highlights in here. All right, as you will note in the date of retirement, date of separation, they are 2 different dates that mirror the 2 different dates that were specified in the first paragraph of your cover letter. You will also find, thank you, Ms. Christina, for dropping the handbook, the current plan you are employed under. That'll help you determine your retirement eligibility. When PERA compares your date of birth and your planned retirement date, we are calculating down to the month how many birthdays you've actually had in our plan. And so, in this case, the member is actually 48 years of age, right on the nose, because their birthday fell in December of the previous year. Next section on the first page reflects the beneficiary's information. Make sure we have their name spelled correctly. Make sure their date of birth is spot on. Make sure their relationship to you is also listed correctly. In this case, the member's beneficiary will be 11 years and 10 months of age at the time of the member's retirement. And for PERA's calculation purposes, we actually have a rounding principle involved. If you or your designated beneficiary has reached 6 or more months into your respective birthday, you actually get rounded to the next full year of age. If you are using PERA's Rio self-service feature, this is often the step that goes wrong for our members because they're not applying that same rounding principle that PERA is. So if you or your beneficiary has reached the 6-month marker or beyond to that next birthday, we're actually rounding you up. All right, bottom section of page 1 has so much information, and honestly, it can be a bit overwhelming. So we're going to start up here in the just under the member account information bar with the member's current service credit. That's their service credit through their employer's last posting. We have how much service credit they'll accrue from that last posting to their projected retirement date. If the member needs to purchase withdrawn, military, airtime service credits, that is also reflected here. And then the last column reads overlapping service or ERB service. PERA needs to work on updating this section as well because any overlapping service credit actually gets taken out behind the scenes. I've never seen negative service credit in this space. It is commonly used for reciprocal service credit accrued under our sister retirement plan, the Educational Retirement Board. So in this member's case, they have 6 months of service credit under their belt. And so when we add up all those columns together, officially this member has accrued 25 years of service credit. Good question. So an individual in the chat asked if they were in a term position for 9 months prior to becoming a permanent employee, officially, are they eligible to purchase those 9 months that they were temporary? And the answer is, unfortunately, not. There are a whole list of exclusions to PERA membership listed in our PERA member handbook. By our rules, somebody could be in a term position or a temporary position for up to 9 months. Beginning in the 10th month, that individual is required to become a PERA member. Those 9 months that are excluded are not eligible for purchase, unfortunately. We are getting into the, that's a really fun question. We are getting into the next section. So officially, final average salary. This is so much fun and so much math and so many dates to take into consideration. So somebody popped up in the chat and said, these total wages look incorrect. And so here's the funny thing. I ran this estimate myself and I've been doing this for 17 years. So let me explain how I came up with these numbers. Officially, for the purposes of our discussion today, Tier 1 members, their final average salary is defined as the individual's average of their highest 36 consecutive months of salary. For Tier 2, it is the member's average of their highest 60 months of consecutive salary. And so when you look at these numbers, it's important to note that it looks like you see 4 years of wages. The problem is it's not. When you look at the left side of that column, you will see that in 2021, it's taking 10 months, taking 12 months out of 2020, 12 months out of 2019, and 2 months out of 2018. When we add those items together, we get 36. When we add up those 36 months of wages, officially, we get that lovely number toward the bottom of this table. It reads just over $305,000. When we divide that by 36, we get the member's final average salary. So here's what I love when I used to be able to review these with members in person. They get the biggest grin on their face and they're cheering and they're like, I can live on that. And so the problem is that's not what PERA is going to pay to you in retirement. That is very specifically the calculation of your final average salary for your tier of membership. If we were to flip back a couple of slides, it would fit into the formula. Years and months of service credit multiplied by pension factor or factors multiplied by final average salary. And so the only piece of the puzzle we're missing right now is the pension factor or pension factors. So when you get your estimate at home, you want to take note of your final average salary, look at the wages, which may or may not match your W-2 because PERA has a very specific to statute definition of salary, which is also included in the member handbook. And so if your salary doesn't look quite right, please let us know. Since that comes to us through your employer's payroll, we definitely want to know if something is askew, but generally our employers are well versed in reporting that data to us. All right, so we're skipping technically to the third page of the retirement calculation pages. This table has more data than you will see on your personalized estimate because it's my job and duty to make sure you understand how your retirement is actually calculated. So, courtesy of pension reform in 2013, a member who was a plan participant of that date, as of that date, PERA could not go back and change how your benefit was calculated. So essentially a line was drawn in the sand. All of your service credit through June 30th of 2013 will be calculated using the pension factor that you accrued that has the highest multiplier, provided you worked a minimum of 3 years in that plan. So if this individual service credit was all broken out for us, we would see they've worked in different plans. PERA isolates that service credit. We look at that pension factor and we determine which of those pension factors had that 3-year requirement, and then we pick the percentage that is the highest out of all of those buckets. And so all service credits through June 30th will have that pension factor applied. From July 1st of 2013, for every tier member, you are accruing the pension factor tied to the plan that you work under. So in this case, when that rule change came about, the member was actually working in municipal plan 2. That plan for tier 1 members has a 2.5% multiplier. That individual worked in that plan for a couple of years, and then they moved over and did state plan 3, presumably for the rest of their career. And so this table is actually calculating piece by piece all the different places this individual worked. Sometimes it gets confusing with this table, but if you are looking at your estimate of benefits, the third calculation page, if in the retirement pension factor column, this percentage is the same all the way down, essentially you take your years and months of service credit, multiply it by whatever that number is, that determines what percentage of your final average salary you're eligible to draw in retirement. If these numbers are all different, your benefit is a little more complicated to calculate. In addition, this individual has reciprocity with ERB. So if I were to sit down and add up all those percentages in decimal form in the last column, I forgot my bubbles, you would see this individual is at 73.68%, or in decimal form, 0.7368. If we were just using PERA data, we would multiply that decimal by the member's final average salary. But since there's reciprocity and there was a rule change in 2017 that requires ERB to calculate their own benefits, the PERA portion of this member's calculation after 24 and a half years is sitting at 72.5%. And so if I took 72.5% of the member's highest 36 consecutive months of salary that we calculated on the previous page, we would get form of payment option A. And so if you sat down with your personalized estimate, you could add up all of those decimals and determine what your benefit would look like. And so to the question that popped up earlier about how does the less service credit, is there a table for that? Essentially, if you've worked in one plan your entire career, you could take the pension factor for your tier and plan of membership and multiply it by that age and service credit table. If you multiplied that by each of those service credit requirements, you would see what percentage each of those sits at. If you prefer, you could reach out to me directly and I can help you walk you through that. Definitely help you to do that. Let's see, where did I leave off? We answered the term question. We answered the salary question. If I purchase withdrawn service credit that was under an enhanced plan, do I get back the enhanced time or the actual years of service credit? And so that's a great question. I would need to look at your file to give you a definitive answer, but in general terms, if you were in an enhancement eligible plan, separated employment, withdrew that service credit, and now that you've returned, you want to buy that time back, you should be eligible to receive the enhanced rate for service credits, but it really does require an audit. We would need to look at where your previous employment was and make sure that we're giving you accurate information specific to you. Salary shown, add to 170. Thank you. I will go back and look at that. I checked it like 5 times, but I will go back. If FMLA time was used, does it take away service credit? So that's a great question. It depends. If you were being paid a minimum of 20 hours a week, each week you were out on family medical leave, there should not be any hiccups in your service credit. If you took the entire bank of family medical leave as leave without pay, it definitely could have an impact. Service credit is looking at your dates and your salary. Full-time employees who get reported to us as having earned less than half of their normal salary officially don't accrue service credit for that month or any month that dips below half while they are a full-time employee. Let's see. If I will not be on retiree healthcare, are only FICA taxes deducted. I will cover that in just a second. Is PERA salary based on pre-tax or net pay? Great question. So PERA actually has over 300 affiliated employers. The majority of them withhold PERA contributions in a pre-tax manner, but that's not necessarily true for everyone everywhere. So in the instances where an employer is withholding PERA contributions post-tax, their post-tax contribution bucket that we call non-deferred actually gets split out over 30 years worth of payments, and the majority of that benefit is still taxable. So I'm not entirely sure how that's beneficial, but essentially a member's pension is subject to federal tax withholding and state tax withholding while you reside in New Mexico. If you move outside of New Mexico, you need to notify PERA in writing of your new address and direct us to stop withholding New Mexico state tax. We cannot withhold for any other state, so you'll need to work with that state's tax and rev. I'm enrolled in the tax deferred plan. How does that impact my retirement? Presuming you are talking about our PERA Smart Save plan, that's an additional benefit on top of your base benefit, and you get to direct how and when it's paid to you. Thank you for updating the salaries. I will go back and look at that. If you worked part-time for 1 year, do you get a full year or a half year? The answer to that question, which staff loves when I give it to them, is it depends. If you were vested in PERA system as of July 1st of 2014, as long as you had 20 hours a week, you should still be receiving monthly service credit. If you were not vested as of July 1st of 2014 and you dip below 30 hours a week, your service credit could be impacted. How? That will be personal to your situation. We would need to look at your hours and wages. So I would recommend requesting a service credit verification. We can tell you where the hiccups in your service credit occur. Is our calculation of monthly benefit amount gross? So let's go on. The answer is yes. So the dark line at the top of the second page of your estimate of benefits calculation officially is quoted in gross form, not like you gross, but like pre-tax, pre-insurance. If you don't want PERA to withhold any taxes at all, you're going to direct us to that when you fill out your application for pension or you fill out an updated tax deduction form. Insurance is handled entirely separately through the New Mexico Retiree Healthcare. If your agency is enrolled in their benefit structure, PERA does not handle any aspect of post-retirement insurance nor pre-retirement insurance. That is completely separate. So under form of payment option A, what you will find is the pre-tax, pre-insurance amount. When we multiply the wages that were used in the sample, regardless of whether the math is good or not, don't worry, we have people who are fine-tooth combing your personalized estimate. Officially, years and months of service credit, pension factors, final average salary, that is what gives us form of payment option A. Under this option, a member receives the set amount once a month, every month they are alive. At the time that they pass away under this form of payment, the member actually benefits stop. If there is any residual wages in that bucket at the time the member passes away, a one-time lump sum refund is issued to their designated beneficiary or their estate if there is not a payable beneficiary under the rule. Form of payment option B looks at the member's age and the age and relationship of their designated beneficiary. Under this option, the member is drawing the smallest of all of the benefit form of payment option amounts once a month for the duration of their lifetime. If the member passes away first, the designated beneficiary receives the amount under their name the month after they turn in a death certificate and the required paperwork to initiate the payment. You will see here that the member's amount varies from the beneficiary's amount. That's because PERA is required to take into consideration the beneficiary's age and their relationship. And so we're going to cover that in a little more detail. But in this case, the beneficiary was 12 by our rounding standards, and the member was 48. That is a humongous gap in the age of the beneficiary, and so the benefits get adjusted to reflect that longer lifespan of a younger beneficiary. Form of payment option C, as in Charlie, pays a higher benefit than form of payment option B. It's still less than A. The member's beneficiary is eligible to receive half of the member's benefit amount if the member passes first. Form of payment option D is known as the temporary benefit. Officially, a member gets, not as much as A, definitely more than form of payment B or C, once a month for the duration of their lifetime. If they pass before one or more of their eligible children reaches 25, their benefit gets split equally amongst the eligible children. As each child reaches age 25, they get a thank you for participating in your mommy or daddy's retirement plan, and then their benefit ceases. When the youngest reaches 25, all benefits cease. If there's a residual balance in the member's bucket, it gets refunded. If the member is still living when the youngest child reaches 25, the benefit payment reverts to form of payment option A. All right, so I tried to stay on task. I know we only have 3 minutes left. So on that note, I still have a few more slides to cover and Karen stepping up to present. So I will answer one last question in the chat and then we'll save the other questions for the Q&A session. I forgot I had circles for you. And then the note about the gross benefits, your pension is subject to federal and tax withholding. How you direct PERA to process those is between you and your tax deduction form. Is 36-month salary used to determine benefit based on gross or net income? The answer is gross. Your employer is reporting your gross salary to us every 2 weeks. All right, so the reason form of payment option B, as in boy, was different under the member's name and the beneficiary's name is because of the little note in this box. If you name a beneficiary other than your spouse who is more than 10 years younger than you, PERA is required to adjust the beneficiary's payment to meet Internal Revenue Code requirements. We honestly didn't do this for the longest time, and then we got the, do it or else letter in the mail from, the IRS, and so we do it now. So when you are picking a beneficiary, the younger they are, the relationship definitely can impact your benefits. All right, topic 6, reciprocity. Just really quickly, we've covered it a lot, probably should have bumped it up in the presentation. Means that you've accrued service credit under more than one state retirement plan. For the majority of us in this space, it'll be service credit earned under the educational retirement plan because we've worked for a public school, college, or university. Officially, those of us with reciprocity are required by 2017 legislative changes to apply for retirement under the last state system we were employed under. So PERA is my last employer. With my reciprocity, I will fill out some extra forms for the Educational Retirement Board so they know how and when to pay my benefits to me, and PERA will coordinate on my behalf with them. Each retirement system is required to apply their own respective rules, regulations. They make their own calculations, including those for cost of living adjustments. Oftentimes, members come to us and say, why don't I see my ERB service credit in my RIO self-service account? Why isn't it visible on my annual member statement? And the answer is related to my previous statement, which is each system keeps everything separate. And so you're never going to find them on one statement unless you're requesting an estimate of benefits or a service credit verification. ERB has its own website. You can actually officially create a self-service account on their website as well. And so you are welcome to do so. When you have reciprocity, you are going to receive a 7th page, as if it wasn't already overwhelming enough. You're going to receive a 7th page in your packet, an estimate of benefits from the Educational Retirement Board. And so officially, when you apply for retirement, you're going to check the A, B, C, or D form of payment option when you are applying for retirement. That is going to mirror the benefits that will be paid by the Educational Retirement Board. Form of payment option A under PERA will also pay form of payment option A under ERB. The same is true with B and C. The only exception to this rule is form of payment option D. They do not have a form of payment option D. They never have. They likely never will. If you select form of payment option D for your PERA portion of your benefits, ERB will pay you under form of payment option A for the duration of your lifetime. And although we don't have time to cover it here today, There are ways to change the form of payment that you select at the time of retirement. You are welcome to peruse our handbook or let us know if you have any questions. I know the floor is open to Q&A now. You are welcome to unmute yourself if you have questions, or you can drop them in the chat. If you have to run away, thank you again for joining us. We will record today's presentation and get that posted. And I apologize for eating up all the time talking to you. And hopefully we got some of your questions answered here today. While we wait for questions to pop up, I'm gonna pop over to Miss Karen. You made it in. Congratulations.
I made it in. Thank you. And wow, this was a popular topic. So I don't know if we talked about the pizza, but this is the deferred comp topping of your retirement pizza. And if you guys have not tried this topping, you really ought to, because it is so good. I did see the question in the chat that said, how does my deferred comp impact my retirement? And this is the voluntary deferred compensation program that is around. So the intent of this program is to complement or supplement your PERA benefit. And what I like to say is that your PERA benefit is going to provide you with a stream of income. You know, you're going to have that monthly benefit every month for your lifetime, where your deferred comp is going to provide you with a pool of income, something that you can dip into at your leisure. So that's how it impacts your retirement. They're completely separate, so you don't have to mix them up to get any sort of calculations. However, you certainly can do that. So if we go to the next slide, for those of you who do have the deferred comp program, when you log into your online Voya accounts, and Voya is the plan's record keeper / custody bank / administrator. So we are privy to Voya's tools. And so the first tool that pops up when you guys log into your Voya accounts, it might be clocking for a few seconds. And what's happening is that giant orange dollar bill, the graphic of that dollar bill is trying to load. And that isn't there just for pretty, that's actually a tool. And since we were talking about estimates, this is the topic that I'll cover, the My Orange Money tool. So this tool is there to help you estimate your retirement income based on other sources of retirement income that you have, based on the contributions that you're putting in today. And you see the different numbers above the dollar bill: estimated monthly income, estimated monthly goal, and then what the difference is. Now you have to input some data in order to get these calculations. And I will show you where to do that on the next slide. So when you go into your account, this is what that screen looks like. And there are two tools here. The first one is the one on top that says, let's talk about your retirement savings. And the second tool is this one on the right that has these little slide bars, and I'll explain that in a minute. But if you want to figure out how your deferred comp will impact or supplement your PERA retirement, when you click on that little drop-down arrow next to the word savings, you're going to get another screen. So you can go to the next slide. The screen is going to look like this, and there's gonna be some more drop-down boxes here. You'll go to your state, which is obviously New Mexico, and then you can select your retirement system. So the drop-down is going to have all of PERA's plans. So you need to know which plan you're in. So for example, mine would be the general state plan. And I'll click on that, and then you click on the word continue. And it didn't allow me to screenshot a lot of details here, but you're basically going to enter what your estimated retirement income is. I was playing around with this, preparing for this seminar today, and it doesn't calculate your PERA pension automatically. You still have to input some numbers. So what I suggest is that you go into your RIO accounts and you use that estimate tool. That way you have a pretty accurate estimate that you're working with. And those are the numbers that you should enter here. I would advise against guessing because you just might guess the wrong numbers and then you've got all kinds of skewed numbers, and it's that old saying, garbage in, garbage out. So if you go to the next slide, once you enter all of your numbers, that is where these three numbers are going to populate: the estimated monthly income, the estimated monthly goal. It's going to ask you a bunch of questions about yourself, how much you want to have in retirement, and then it's going to give you the shortfall. And then what you can do is use the slide tools there on the right, and you can say, if I increase my biweekly contribution by X amount, and you use that slide tool, and you enter your retirement age, then that dollar bill is going to change. It's going to change, it's going to slide, and it's going to tell you how much closer you are to your goal. So I know that is a lot of information I'm being cognizant of time, but when you go into your Voya accounts, that is your time to go in there and just sit down and play with those tools. And you're going to see that there is a wealth of information in there. And if you enter the right numbers, then it's just going to help you figure out where you are with your retirement and how your Smart Save account is going to supplement your income. I know that was a lot. If there are any questions, the contact information will be at the end of the presentation. And that's all I have, Christina.
Thank you, dear. Since somebody was asking about leave balances, can you just touch really quick on their ability to roll that? If
Yes,
it's allowed
absolutely.
to their employer.
Yep. So the question, I believe, is can I roll over my accrued vacation and or sick leave, if applicable, into my deferred comp account? And yes, you can. There is a special form that you need to complete. You will work with your payroll department on getting those numbers. Basically, you just cannot exceed the annual IRS limits. So the IRS limits are right now 20,500 or 27,000 if you're age 50 or older. So you have to add up all of your contributions to date, and then you and your payroll department will figure out what that annual leave balance is, and whatever is that fits within 27,000 or 20,500, that is what you can send to your deferred comp.
Perfect. Thank you so much. Definitely a smart way to add to that bucket of savings in retirement. Really appreciate you joining us. I'm sorry you had trouble getting in today, but
oh,
we're happy.
That's okay. Okay.
Super. All right. Thank you so much. All right, so officially, I messed up my presentation screen trying to drop a copy of the PDF. As I mentioned to those that had to leave a little bit early, we will post a copy of it on the website, but I was able to drop it in the chat for those of you who are still on. We appreciate your patience. And so just a few last minute notes. We'll answer any other questions that you may have. We actually built a self-service feature when PERA rolled out our RIO self-service account. RIO is an acronym that stands for Retirement Information Online, and it gives you just that. If you click on the yellow button on this lovely screen, or if you're on our website and you click the yellow button, officially, it'll direct you to our self-service site. Once you create a user ID and a password, you can run an estimate of benefits. If you're having a rough day, you can calculate the cost of airtime. You can check your service credit, check your current pre-retirement beneficiary. Post-retirement, you can download tax documents, see the details of your monthly pension benefit. So if you are nearing retirement, please use a personal email address rather than your employer-sponsored one. Also, as a friendly reminder, your password will expire every 120 days. We had to put that rule in place due to an audit finding. If it's any consolation, I lock myself out all the time. It's really super fun. All right, so PERA has 2 offices. Officially one in Santa Fe, just across the street from the Santa Fe New Mexican. Our staff, our call center staff, has been in place since March 13th of 2020, day in, day out, answering calls from our members. Only exceptions have been weather or holiday-related closures. The outreach team responds to the PERA member services emails and PERA Albuquerque. My bureau chief and our colleague Jose Trujillo are based out of our Santa Fe office. I'm based out of Albuquerque. For those of you who visited us in Albuquerque in the past, during the pandemic closure, we moved. Like, I got a message that said, come pack up your stuff, we're leaving our old building. So if you saw us on Louisiana, we are now just south of the Osuna and Jefferson intersection. Staff has been in the office ready to handle any questions. Generally, if I'm presenting, I'm not responding to emails, even though I have been slightly distracted today with all of the fun technical issues, but you are welcome to reach out to us. We are happy to help. And so I know that PERA is doing a soft reopening for this month. It's not something that we're like announcing from the top of the Sandias. And so my understanding is that members can bring in their retirement kits this month. You are welcome to reach out to us so we can verify those specifics. But essentially, the past few months, we have been taking appointments for members submitting retirement applications. My understanding, our soft reopening will allow members to walk in anytime between 8 and 5. So please feel free to reach out to us. We do have secure drop boxes available at both locations. You can also submit documents to us via fax, mail, email it to no reply. You can upload your forms and applications for retirement through your Rio self-service feature. We also host seminars twice a month via Zoom currently. As part of our soft reopening, we are discussing our in-person seminar schedules and hope to get those updated on our website sooner than later. We know everyone is eager to get in the door. As we celebrate our 75th anniversary of PERA being the best retirement system, we dedicated a website to our history. And so it's really fantastic if you have a chance to go through and look at the first ever PERA bill. Look at some of the news articles and artifacts that we've been able to uncover. And so that historical journey has been really amazing. After 17 years, I still come back here because I learned something new. Our website has a whole host of information for you. We have a video library dedicated to how to retire, how to interpret an estimate of benefits, how Tier 1 and Tier 2 retirement eligibility work. If you have a suggestion for another video, I have a few that we're floating right now. Please shoot that to us. We're happy to take any suggestions. All right, so if you want to make an appointment to discuss your file, so here's the thing. If you are requesting the cost of purchasing service credit or you need an estimate of benefits, my understanding is staff cannot do that on the fly, like somebody walking in the door, because it actually is an audit process. There are system checks and balances. And so officially, if you need information related to the cost of purchasing service credit of any type, please complete and submit a PERA request form. Once you have a response in your hot little hands, you are welcome to visit and ask any questions that you have, but staff cannot provide those on a walk-in basis. They haven't in a really long time, so that's not a change related to, the state of the world. And so if you have your purchase agreements in hand and you have questions about them, by all means, we are here. We are happy to help. And so please let us know. All right, so PERA has several social media channels. If you are a lover of social media, please follow along. It's one of the many ways we communicate with our members. We still send out our newsletters a few times a year. When big changes are coming, we generally try to loop everyone in via every method that we possibly have available. And so we encourage you to follow along if you have not already. All right. Next month, because we are presenting during the lunch hour, this month's theme was related to slices of the PERA pizza pie. Next month, Our series title is Do Not Know What We'd Do Without You. So donuts, hopefully you can grab a donut and join us. You know, dessert before lunch is always a good plan. In honor of National Donut Day, we will talk with PERA's current and past leaders as they take us down the 75 years of PERA legacy. That is scheduled for June 1st at noon. Additional information will be posted on our website, and we hope you can join us. All right, so thank you all so much for hanging on. We truly appreciate you. As a reminder, this is your PERA, this is my PERA, this is all of our PERA, and we're doing everything in our power to help you through this process. No one retires every day. We are here to help you understand how your retirement benefits work. If you have any questions, rather than listening to the PERA rumor mill, please do not hesitate to reach out to us. We would be happy to help. And so I think that's my last slide. So in lieu of closing it all down, I'm just going to dial it back to our contact information and then stand for questions if you have any. If you do not, again, on behalf of PERA, thank you all for joining us. I would also like to thank our staff and our board members who took time out of their busy day today to join us. We truly appreciate you and wish you all a wonderful day.
Christina, I had a question in the chat room.
Sure.
Since we have a salary increase happening 7/1, if I retire December 31st of 2022, will these increases be factored in for these 5 months?
Fantastic question, and I'm sorry I missed that. I think my scrolling feature got ahead of me. So the answer is final average salary. When PERA is assessing that for anyone, we are looking from the beginning of your career when you earned peanuts to the end of your career when you were up to a peanut and a half. And we're isolating the 36 months in a row that generate the highest average for Tier 1 members, or the 60 consecutive months in a row that generate highest average for a Tier 2 member. For the majority of our members, that happens toward the end of their career. And so as long as salary is being reported to us, we will look at everything from the beginning to the end to assess. If you're setting your highest salary now, that is likely the area where those 36 or 60 months will, end. But that's not true for everyone. I know individuals that I've personally calculated that have set their final average salary maybe 10 years ago because they were in a more stressful position that had a higher salary, and then they took a step back for personal reasons, and we're retiring them on that salary from 10 years ago. So, as long as it's salary being reported to us, definitely something that will be taken into consideration for some of our members. That, that is where they will pick up our final salary. For others, maybe not so much. So it's very individual. When we do in-person presentations, I tell folks, you are all snowflakes, not because we think you're flaky, but because you are all unique in your situation. Some of us have reciprocity, but we might also be different tiers and different plans. So everyone's unique retirement scenario is individual to them, and basing your retirement on the person in the chat box next to you generally is not a good business plan. So hopefully that answered your question. As long as it's being reported, it'll be taken into consideration.
Okay, so those last 5 months you're saying, because I'm just in the general plan, I haven't moved around, and I've worked for like 30 years with the state. So they'll take those last 5 months into consideration, right? When averaging.
They will.
Okay, thank you.
Absolutely. All right.
Well, you did a very nice job, Christina. So do you work out of the Albuquerque office or Santa Fe?
I'm based out of Albuquerque, and I appreciate those kind words. The presentation, anyone in our outreach team will tell you the presentations are our favorite part. We miss actually seeing people on the road. We hope to get back to that a little bit later this month and into the summer months. So yeah, we're very excited. to be able to do this part of our job again with actual people making eye contact.
Well, you did a very nice job. So thank you.
Thank you so much. I appreciate that. Take care.
Hi, Christina. I just jumped in because I tried to get in earlier and you guys were full. So next time I'll be real early. I just wanted to say hi. I heard the last few, like 3 minutes of what you were saying. I have PERA and right now I'm in ERB. And I was just wondering, do you know if it's better to retire with PERA or with ERB or it doesn't matter? I know the COLA is different. Yeah.
It is. So I'm just going to dip back to this reciprocity slide. For me as a PERA member with reciprocity, my PERA benefits are richer for 2 reasons. Under Tier 1, PERA is going to look at the average over my highest 36 consecutive months of salary. And because I've been a member of State Plan 3, my years and months of service credit are going to be multiplied by 3% on PERA's side of the aisle. While I love my reciprocity because it's going to allow me to retire at a younger age, my ERB benefits are going to take into consideration my highest 60 consecutive months of salary, regardless of which tier I fall under. And I'm Tier 1 under their benefits. They have 4 tiers now. And so their Tier 1 benefits, because I've reached 25 years of service credit, are going to be multiplied by 2.35%, but some of their other tiers have lower multipliers. They have reduction factors for retiring prior to age 65 in some instances, prior to age 60. And so generally, ERB benefits are lower. The additional perk to having reciprocity is regardless of which system I earned my highest salary, both systems are going to use that higher salary in their calculation.
Yeah, that's really good. So there's really maybe no benefit to, going back to PERA before I retire?
No, it sort of depends. I have friends who are teachers, my kiddos have teachers, and the salaries that they're giving some of their educators, the percentage of raises that they're receiving pale into comparison to what most states and municipality entities have offered their employees. So it's kind of a double-edged sword. Like, do I go for the higher salary or do I go for the higher multiplier, right? So you kind of have to weigh the pros and cons of both. The other thing is, if I stay and max out my PERA pension benefits and stay to 90%, which is the maximum for my plan and tier of membership, which is, for the majority of us, that's also true. My ERB benefits would be paid in addition to the 90% I accrued on PERA's side. So okay. Lots of perks.
Can I just tell you in 2 minutes or less what my situation is, and maybe you can tell me which is best, because I'm still confused. So I have, my first years were with PERA. I had 6 years and I bought 1. So I have 7 altogether. I have 22 with ERB. That's where my current employer is now. I don't know if this, I guess it'll matter. For PERA, I was making $9.28 an hour. No, it was $9.08 an hour. With ERB, I'm making about $114,000 a year. So I'm getting ready. Well, yeah, I'm getting ready to retire maybe in a year. Maybe when I turn 60, that'll be another 4 years. So I know that people have done this before in the past, and that's why I'm wondering, would it be best for me to go back to PERA before I retire and retire under PERA? Or if there's no benefit, I think the COLA, well, I don't know, things have changed so much, but I don't know if there's any reason why I would do that, or just retire under ERB. And if I'm not, the way I understood it is my 7 years will be multiplied by 3%. And under the ERB, it would be 2.35. So is there,
So since I haven't personally audited your account and you technically work under our sister retirement plan, my recommendation to you would be to request an estimate of benefits through ERB. To my knowledge, they don't have a form for that. You just reach out to them and request an estimate, call them, email them, and tell them you're considering retiring a year from now. That is the furthest out they'll calculate their estimate of benefits. And then once you have that estimate in hand with our piece and their piece, I would be happy to, you could reach out to me at the PERA-Albuquerque email address, and we could, discuss how those two pieces would work together. But coming back to PERA, if you could find a job that paid you better than the salary you have under ERB, maybe that would be better. But for all intents and purposes, the discussion that we had on the previous slide, which I thought I was in this screen, each system is required to retain their own rules, regs, pay their own pension benefits and cost of living adjustments. Even if you came back to our side, you're only adding service credit to the PERA portion of your benefits. It's not going to change when you're eligible for a cost of living adjustment under ERB. It's not, unless you're going for a higher salary in that transition, it's not going to have a dramatic impact in the typical sense, because it's not going to change your multiplier for either side. So PERA side at 3%, ERB's at 2.35%. They all retain everything separately. And when you retire, you're going to get two separate payments. PERA's cost of living adjustment for most members gets paid sooner than ERB's, but each system determines that on their own and makes those payments directly to members. So making that switch to come back just to say you retired out of PERA doesn't make logical sense in my brain unless you were doing it to take advantage of return to work rules, which is way outside the scope of what we're discussing here.
Yep. Well, I didn't know about the 2 checks, so I learned a lot from you now. So, well, thanks for your time. And I don't know, you're probably way over. So, thank you.
We're here to help. Thank you so much.
Thank you. Have a good afternoon.
You do the same.
Thank you. Bye.
Bye-bye. All right. Any other questions before we wrap up today? Either in the chat. Let me know if I missed anybody else. Let's see. I think we caught everyone. All right. Well, thank you all again. We truly appreciate you and your time. My sincere apologies for running way over. If you have any questions, PERA is here to help. We hope to see you all on the road sooner than later because we've missed you and we missed eating in all of your wonderful cities. So we promise not to make it a food-only tour on
Christina?
our Yes.
I was just wondering, I actually missed the presentation. Will you be able to email it to me, or can I listen to it at a different time?
So we are actually still in the recording phase. I probably should have stopped that a little bit ago. Officially, this event was recorded since we hit capacity. It will be posted on our website, and we will include a copy of the PDF presentation for participants as well on the website. Since we didn't do pre-registration, I don't have a way to track who logged in and who didn't. So it will be available on our website later this week. The entire thing for playback. So it'll definitely be available.
Oh, I appreciate it. That's very helpful.
Absolutely. Thank you for fighting your way in. We were not expecting to reach capacity for today's presentation. So
yeah,
we appreciate continuing to try.
I did try to come in earlier, but it said full capacity, so I wasn't able to access it.
We apologize for that. We've never hit capacity in the 2 years we've been doing Zoom presentations, so we learned a lesson today.
Well, I just had one other question. when you're approaching retirement, I'm in the 25-year plan with PERA, and I'll have my 20 years in this December. Can you
Okay.
buy more than 1 year if you want to retire earlier?
So officially, yes and no. Airtime is capped at 12 months of service credits. They can be purchased 1 month at a time, but no more than 12 months maximum. In addition to airtime, members are allowed to purchase up to 60 months of military service credit, provided that military service was completed prior to employment. So if you have pre-employment military, active duty military, you may be able to purchase that in addition to airtime. Another type of common service credit is known as withdrawn, forfeited, refunded service. So if you worked for PERA in the past, separated employment, and took a refund, we would allow you to buy all of that, provided it doesn't take you over plan maximum. So if you don't have military, you don't have withdrawn service, airtime is essentially capped at 12 months.
Okay, thank you.
Absolutely. Thank you for your question. All right. Well, I think we're going to call it a day. I hope you all find some yummy pizza to have this afternoon after staring at all the pizza pictures. Thank you again on behalf of PERA for joining us. We truly appreciate you. And if you have any questions, please let us know. Take care.